Hi guys, how are you? Welcome back. Welcome to Real Macroeconomics and Investing. Welcome to TradingView YouTube and Twitter. So, what's going on hither? A lot of stuff happened today. So we'll kind of go over the crypto mostly, but since this chart is up, ooh, look at that one, huh? Isn't that a bundle of joy? The best part, the best part is that it's down 87% from top to bottom. It's currently now down 78% from all-time highs, and and you have the little kids and the little bots coming in. They're like, "Hey, GameStop is gonna win. It's gonna go up. We're gonna become millionaires." It's like, yeah, right, whatever. Good luck with that. Imagine having such a disastrous stock. It's epic, disastrous stock, and yeah, the bots will not stop. Imagine trusting your kid to this guy, huh? It's for me. I like this stuff. Yes, you like this stock. Great. I'm happy for you. Thank you for your money. All right. So what's going on here? Couple of things. First of all, I want to talk about this chart here. This was first published back in June 10th, 2021. And basically, what I was showing here that at the time, inflation, everybody was running around. Oh, don't worry about it. It's supply chain. It's transitory. Don't worry about it. Blah blah blah. And I posted this. I posted a great many things about that. It's not transitory. And again, I usually don't do targets, but in this particular case, I'm like, all right. The first thing that's going to hit is 3.9, and then the next target is going to be somewhere around 5.3. And we use this as a guide to let us know what's going on with the Fed. It literally got as negative as 8.4. Okay, imagine buying a bond that's going to give you inflation adjusted negative 8.4% a year. Wow. So I was pointing that out, and again, people were running around supply chains. You didn't understand, and showing me pictures of Long Beach, California, and how all these ships were waiting to dock and blah blah blah. Meanwhile, as you may know, I am an airline captain. I've been flying in Long Beach for many many years, in and out of there. I know what the ships look like. It was nothing more than uh, what it's always been. Okay, especially around the holiday season. So everybody was like, "Oh my God, look at all those ships." It's like, yeah, do you know what it looked like before? No, you're just somebody showing you a picture of a ship, and you determine that, oh well, he says it's a lot, therefore it must be a lot, and whatever. So anyway, getting back to this chart, and then it started to pop, and I say this is easy money territory right in here, right there. Okay, so it's very easy money, and if you scroll back, then this is when the Fed was fighting inflation here, right? So this is fighting inflation. This is easy money. The Fed today stopped raising rates or paused exactly at that key area right there. See it? Magic. Magic. It's not really magic. It's very easy to see once you create a chart that makes sense. So it's not surprising that the Fed stopped here. Now it could have gone a little bit more. Whatever, doesn't matter. Maybe done another 25. Doesn't matter. But this area is key. All right. So important to remember. So it's not magic, my friends. It's not magic. There's a rhyme and reason to everything as long as you know what you're looking at. All right, let's move on from here. Every time I see this chart, I laugh. I can't. All right, so let's continue here. Let's talk about, well, before we do that, let's talk about cryptos. So back on June 9th, I came out and I said, oh, be careful. This is a key area, right? And this is what charting is about. So we're all on the same page. Charting is about finding a good risk reward. just not willy nilly buying and selling every which way. Okay, you want to find a good risk reward area, and the way we do that is we use very simple methods of one, two, three. Right? It's not Elliott wave. It's nothing like that. We just use the waves, and it's always going to deke one way and then another and then another, and it's going to form a structure, right? Three waves, 4 points, forms a structure. If the structure is pointing up, the next likely move is going to be down, and then that's going to create some kind of structure, and then it'll go up, and this is what markets do. It's not complicated, but people make it complicated. They put all these candlesticks and colors and RSIs and the MACDs and the Hokomokochukuku and this and butterflies and pictures, whatever. Keep it simple. Um, find the good key risk reward areas, uh, and then wait for it to do what it's got to do. And again, I'm going to point out that the fact that it crossed the line doesn't mean a whole hell of a lot, right? Okay, cross the line. Everybody's like, oh, I'm going to buy it, I'm going to short it, I'm going to set my stop, and it doesn't work like that. Unfortunately, it doesn't work like that. It's very difficult, right? To try to cross the line. I'm shorting, I'm buying, I'm whatever, and then he moves and it kicks you out, and you do it again when it crosses the line, and it doesn't work. You'll die of a thousand paper cups. So what you ideally want is something like this, right? Where it comes at the bottom of the structure, starts to consolidate at the bottom of the structure, starts giving you that bearish setup, right? Remember, if it's going up and it has three waves and it's a valid structure, what's it going to do next, right? It's going to deke. It's going to deke, right? It's going to deke you out, then it's going back up. And sometimes it does go back up. That's fine. There's nothing wrong with that, provided that you're patient, you wait for this to break, right? That's the beauty of key areas. We don't willy nilly just go out and start buying and selling because we read something on social media. We do our own analysis. We wait. Ideally, you want to see something like this, and then you buy it, and then you run with it, and you manage the trade, and that's the way it's done. Ideally, you want to have nice big waves that you want to, carry the trade through. Now, of course, in big waves, you're going to have up days and down days, and but as you get used to these bigger waves, and most people are never going to see those bigger moves, as you get used to them, you stop getting emotional about it, right? It's going to go up, it's going to go down. Of course, you're going to have trolls. They're going to come in and they're going to start telling you, "Look, it's up. Look, it's down. Look at." But fortunately, you don't have to deal with trolls. You're trading your own account, so don't psych yourself out, and don't go on social media and listen to trolls. Just do your own analysis, find the good risk rewards, wait for the ideal setup, wait for that break. Okay, again, if it does something like this, right, and it breaks out, starts running, you buy it. If it does something like this and then it starts to break down, you short it. That's all there's to it, really, right? So let's see what happened since then, right? We got a nice little boom, nice little dump. It's like magic, okay? Like magic. Now let's take a look at. Here he is again. Yeah, trust him with your kids, right? All right, so let's talk about this one a little bit closer, and it just kind of prove the point. Um, I first of all I came in. Ooh, where is it? Yeah, and I started talking about the setup that I started warning. That was June 13th. That look, see it? This is a bear flag. Next move is coming down. Okay, that's what happens more often than not. Then I zoomed in a little bit and I said, look, going up. Next move is down. And then I came in and I said, look, it's magic. It's magic. There, there, boom. That's it. Right? It's not more complicated than that. Uh, so here we are. Boom, straight down. And that's the way markets move, ideally, right? Not always. You get particle moves, of course. Particle moves are the ones that are not going to give you a wave, the ones that are just going to be very emotionally driven and they just keep going straight up and up and up, never getting that wave to, uh, to go back up. Eventually, you'll get the wave, but it just feels at the time that it's never ending, right? Those are the other kind of moves. So this one is a more normal, orderly kind of move, I would say. Right? You get the setup here. This is kind of fuckery, I would say. I don't know, for lack of a better word, right? But generally speaking, this is what it's showing, generally, right? Then it drops, then it starts doing the consolidation, and naturally the next move is down, and then you start doing this, right? So now you're like, okay, it's a 1, 2, 3 down. The next move is going to have some kind of correction up, and then let's see how that goes. If it stays below this area here, then this is just a correction, and then there'll be more downside, and then you go on from there. Okay, and that's the way it's done. So it's not magic, although it looks like magic. It really isn't. Okay. Um, Quickly, let's take a look at Matic. All right. So Matic had that big drop as we talked about in the previous video. Nice big, longer bear flag than I anticipated. Doesn't matter. Outcome is the same. It dropped. It popped. Now it's kind of rolling over. Once they break, um, it's very difficult to go short because what happens is you'll be shorting in the hole. That's a big no-no. You don't short in the hole just like you don't FOMO. So uh, always difficult to explain this to people because it's kind of like a roulette table. Everybody waits till the ball drops and let's say it's red, and then everybody's like, "Oh, I'm going to bet red." You can't. It's a violation. You can't. But it came red. Can I bet red? It's like no. The point is to do it before the ball falls on red. That's how these are the rules of the casino, right? We don't place bets after it's fallen on red. It's the same rules. The problem is there's nobody next to you to say, "Hey, you violated a rule. You don't short in the hole." Okay? And then people are like, "Oh, come on. Why did it go up?" So be your own casino manager. You know what I mean? Don't be shorting in the hole. Because what can actually happen at any time is it can do this. And then, you're short here or here or here or whatever, and then you're in trouble, and you know things get very ugly very quickly. Now, when you look at Matic, it's been telling you, for such a long time that this is going to go lower. If you know what you're looking at, you had a head and shoulder here, you had a head, here, you had a head and shoulder here, right? You had a double top here, right, which was the right shoulder. So the writing has been on the wall for a while, and it actually is going to translate to more information as you look at other cryptocurrencies, right? You want to extract information from the data. You don't want to apply your vague hunches and feelings to the data. That's another very big lesson that people have to learn. Um, it had the potential to break out here in Solana, right? This had the potential to break out. How far it runs is anybody's guess, but there are rules that from failed moves comes fast moves in the opposite direction, and that's exactly what happened here. It never broke for a long trade, although I posted it. Okay, it failed, and then failed in a dramatic fashion. It dropped 40%. Okay, again, you do not want to be shorting in the hole. That's a big no-no. Another example here is, when a chart is telling you there's lower lows and lower highs, people are trying to pick bottom and trying to go long. This is a mistake because you might be able to catch a trade, right? So you look at this here, right? So it kind of breaks down, right? Forms another bear flag, breaks down, looks bullish because bullish in the sense that it has to correct, not necessarily bullish that it's going to be a reversal. Okay, so it corrects. Everybody runs in here, and then what happens? Boom, they get crushed. And then you get into this situation here, and everybody gets all excited. They're trying to buy. They're trying to buy. Yeah, but you got a bunch of lower highs and lower lows. So what are you trying to buy? Well, it's going to break. It's going to go. Well, it's got to cross this line. This is very far away from this line. So you come up with a nice little setup like this, a nice little bear flag, right? Get this nice little bear flag, and it breaks. Then it comes back up. If you start freaking out, you shouldn't. Why? Because it never came back into structure. It's still way below structure. And then it made it kind of difficult because you had to hold and you needed time and whatever. Does another little pop. And then what happens? Boom. Why? Because the chart is telling you lower highs and lower lows. And of course it's going to keep doing that. It just doesn't feel like it when it's in here and here, over here and there. It doesn't feel like it. Now, granted, hindsight being 2020, everybody's an expert, but I think my calls have kind of demonstrate that, no? Right? That I get things right more often than not. It's just, it's the way it is. What happened here? All right, there we go. All right, so OPEC, right? Oil. Look, when OPEC is sitting here telling you we're cutting production because global demand is not there, and you got a bunch of lower highs and lower lows, you don't run out and buy OPEC because OPEC said we're cutting production. This is again one of those fallacies. So what happened? Boom, it came right back down. Right? You should read the comments down here. Oh my God, everybody's screaming no, whatever. They don't know what they're talking about. Okay, um, but that's the way it works. How about the ruble? Ruble, I said, look, it's going to break out. Right? Where's the ruble now? 84. Okay, it's breaking out from this area right here. Am I lucky? No, it's not luck. It's not magic. I don't have a crystal ball. Um, it's based on macroeconomic understanding. It's based on simple charting application. Uh, it's based on good risk reward, and that's it. Don't I extract information from the data. I don't apply my vague hunches and feelings to the data. Right? These are very important things that you must learn how to do if you are to become an investor, a long-term successful trader. You need this information. Here's clean harbors. Nice little setup. Came up once, twice, 3 times, 4 times, 5 times. Well, you can see it's a high base, right? You had a nice little pull here, nice little high base. Well, what do you think is going to happen? Of course, it's going to continue up. Okay, that's what the chart is telling you. Does it have to? Doesn't have to do anything. It's just a more likely scenario. So look what happened since. Okay, beautiful, beautiful little fuck. Oop, beautiful little moves. All right. So there you go. It's magic. Bricks. Oh, the bricks are going to do this and the bricks are going to do that. Well, bricks relative to the S&P 500 is self-explanatory. What do you think this chart is going to do? Oh my God, it went down. Wow, that's magic. So anyway, that's the video for today. Be cautious out there. Um, I don't want to say too much about the market. I want to keep this crypto in a little bit of my diary here. Maybe I'll do another video about the overall market, what I think is going on, maybe later. But for now, that's it. Thank you very much. I appreciate it, and thank you to the guys that that gave me the likes here. This chart, which was magical, only got 6 likes. Now it's up to 11. Woohoo! So anyway, that's it. Thank you very much. Take care, guys, and I'll talk to you soon. Bye bye.